Welcome to the Transparent FX Academy. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can notice is that we have a market which at the moment is in a very strong bullish trend. We can notice the creation of these monthly higher highs and higher lows, and all this bullish trend is fueled by very strong institutional buying. And we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis to analyze how institutions are moving their orders. But for now, let's keep in mind that we have a very strong bullish trend, but at the same time, we have to notice how already for 4 months in a row, the market has failed in creating new highs. The market, every time that has reached this level, has consistently failed in breaking out higher. And at the moment, the market is going again inside of this exact same level and testing it as resistance. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. What we can notice is that we have a market which so far has been creating this triangle formation, also called a wedge. So this essentially means that the market has been creating lower highs and higher lows at the exact same time. So this is a very popular consolidation pattern. The last time the market created such pattern was back here when the market was creating, again, as we just said, higher lows and lower highs at the exact same time. And what followed after that was the breakout to the upside. That is what usually happens if you see a market which is in an uptrend and then starts consolidating. Usually what you expect after that is a new impulse to the upside and new bullish continuation. I'm sure you have seen this pattern already play out in the market in multiple occasions. So at the moment, here on the monthly and weekly time frames, everything is quite clear. There's good probability of at least the market trying to go higher. Now, there's no guarantee that the breakout will happen, but if the market will go higher and test that resistance, we have to keep in mind that already on the monthly, the market in multiple occasions has tried breaking out higher and it failed every time. Now, keeping all of this in mind, let's drop down on the daily time frame. Now, from a daily perspective, I spoke about gold just a few days ago. After the market had created this W formation, I explained all the reasons for which I was expecting from here the market to first go lower and complete this W formation at the neckline, and then from here to continue higher, which is again exactly what the market just started to do. And I will link in description those two previous analyses in which I explained exactly these two moves and why I wanted to see them. I will link it in description so you can go and check it out for more free education. But at the moment, what kind of price action and structure we have? Well, before we analyze in more details what kind of structure and price action we have here on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing in the gold market. Now, first of all, if we're looking at the data for gold, we're actually already looking at gold against the USD. So gold USD, which is what we are already analyzing because all currencies on the spot and also commodities are traded against the USD. So the data here is already gold USD. And what we can see is that with the last report, net positions have finally started to be decreased. We went from 229.4K to 212.5K net positions, showing how institutions have now started adding shorts on gold. We can see 4,000 shorts added with the last report and 12,800 longs getting closed. So institutions are now starting to slowly add shorts and close longs. So it's no surprise that the market has struggled in continuing higher and breaking that resistance that we have previously identified on the monthly time frame, because institutions have increased their shorts from 55.1k to 62.6k and decreased their longs from 292k to 275k. So let's keep all of this in mind and move back here on the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. Now back to the analysis. So in a situation like this, we have to keep in mind that this area here is the resistance zone that every time the market is failing in breaking to the upside. Every time the market is testing this zone, the market is reacting to the area with very strong selling pressure entering the market and price dropping lower, meaning that this is a very strong supply and resistance level. So if the market will actually go and test this area, what would I expect? Well, first of all, there is good probability to see more institutional shorting of gold if the market will reach this zone. So if the market will reach this area, what would I expect? Well, first of all, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential reversal lower away from the supply and resistance zone fueled by more institutional shorting. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.